Mastering the market, the power of candlestick formations. In the fast-paced world of Forex trading, one thing remains constant: the language of the market. That language isn't spoken in words. It's spoken in candlesticks. Every candle on your chart is a footprint of psychology. A record of fear, greed, indecision, and conviction. It's not just a shape on a screen, it's a story. If you want to master the market, you must first learn to read the story. And that story begins with understanding candlestick formations. The purpose of candlesticks are more than just visual representations of price. They're the real-time emotions of every market participant, from retail traders to institutional giants. When you open a chart, you're not just looking at data. You're looking at battles between buyers and sellers, between bulls and bears. Every wick, every body, every color tells you something. A long wick shows rejection. A small body signals indecision. A strong bullish candle after a downtrend? That's momentum shifting. A doji at resistance? That's hesitation before a potential reversal. Reading candlesticks isn't about memorizing patterns. It's about understanding market psychology in motion. The core formations. Let's break down some of the most powerful candlestick formations, not just to recognize them, but to understand what they represent. 1. The pin bar, rejection candle, long wick and a small body. This candle tells a clear story. Price went somewhere, but it wasn't allowed to stay there. Buyers or sellers rejected that level. It's not just a reversal sign, it's a signal of rejection and power shift. In a demand zone, a bullish pin bar may signal the end of selling pressure. At a supply zone, a bearish pin bar could mark the start of a drop. But remember, one candle doesn't confirm the move. It suggests the intent. The engulfing candle. This is when a candle completely swallows the previous one, body and sometimes wicks. What does this mean? It means momentum has taken control. A bullish engulfing after a downtrend? Buyers just overpowered sellers. A bearish engulfing at the top? The tide is turning. Engulfing candles are not just signals, they are statements. They say, we are taking over now. The doji, a candle with a tiny body and equal wicks. To the untrained eye, it looks insignificant. But a doji represents confusion. Stalemate. The market pushed up, it pulled down, and ended up right where it started. That's not weakness, that's potential. Because indecision often precedes decision. And when price breaks out of that hesitation, it does so with power. Morning star, evening star. A three-candle formation. The morning star comes after a downtrend, signaling reversal. The evening star forms after an uptrend, signaling exhaustion. These patterns show transition, from weakness to strength, or vice versa. They combine rejection, hesitation, and confirmation, all in one sequence. It's not just a pattern, it's a shift in the market's energy. Here are three truths. Truth number 1. Context is king. A pin bar in the middle of nowhere means nothing. But that same pin bar at a strong demand zone? Now it's a potential trade signal. Always combine candlestick patterns with key supply and demand zones. Market structure, trend direction, volume, if applicable. Don't trade the candle, trade the story it fits into. Checkmark truth number 2. Confirmation is your ally. Let the market prove its intent. Don't enter just because you see a pattern. Wait for the next candle. The break of a high or low. The retest. Let the market invite you in. Checkmark truth number 3. Patience pays. The best traders don't chase every candle. They wait. They wait for the right zone. They wait for the right pattern. They wait for confirmation. And when all the pieces align, they strike. Because in this game, discipline always beats impulse. Section 4 Mindset and Mastery. You don't need 100 indicators. And you need the ability to listen to what the candles are saying. Because the candle doesn't lie. The formation doesn't care about your emotions. It just tells the truth, if you're willing to read it. So slow down, study the formations, respect the zones, and trust the setup. The market rewards those who wait for the right candle, at the right place, at the right time. Every great trader has gone through this journey, learning what a candlestick means. misinterpreting it, losing on it, then finally mastering its story. It's not about being perfect. It's about being consistent. You'll see fake outs. You'll see patterns that don't play out. That's part of the process.